Hello everybody, what is going on? Thank you for tuning in to your daily dose of cryptocurrency news. In today's video, we're going to be talking about Yale University investing in a $400 million cryptocurrency startup. Then we're going to move on to Bitcoin volatility, and then we will move on to the market. So Yale, one of the most prestigious Ivy League universities in the US, is reportedly a part of an investing group that is helping to raise $400 million for a massive new cryptocurrency fund. According to a report by Bloomberg published on Friday with information supplied from an anonymous source familiar with the situation, the university is trying its hand in cryptocurrency via the fund Paradigm, which is reportedly to be helmed by Coinbase co-founder Fred Eshram, Charles Noyes of Pantera Capital, and former Sequoia Capital partner Matt Huang. The Wall Street Journal had previously reported on the departure of Huang from Sequoia, making the move in order to join with Eshram in the creation of the new fund. While this has been reported for the first time that Yale has invested in the cryptocurrencies on such a massive scale, the school has had its influence felt in a number of different industries, from Puerto Rican bonds to timber in New Hampshire, as reported by Bloomberg. Among the more interesting details listed in the finding is that Yale's $30 billion endowment, the second largest among U.S. educational investors, has earmarked a whopping 60% of its investment capital in 2019 for alternative investments, which includes, among other things, venture capital, hedge funds, and leverage buyouts. So for those of you who don't know what an endowment is, it's kind of like the college's savings that they're able to use for whatever they want. Added to the list now appears to be cryptocurrency, with the potential for other blockchain enterprises and even promising ICOs. For now, the fund being led by Eshram is planning to invest in early-stage cryptocurrency-based projects, novel blockchain designs, and digital asset exchanges. Given the timing of the report, which comes days after Coinbase was valued at a colossal $8 billion, which would make the company one of the most valuable US startups, the landscape of cryptocurrency exchanges appears to be immensely profitable and largely untapped. Earlier in the year, BitMEX co-founder Ben Dilo became the youngest self-made billionaire in history of the United Kingdom. CZ, the active CEO of cryptocurrency exchange Binance, announced that his company was on pace to eclipse $1 billion in profits by the end of 2018, despite it being an abysmal year for the valuation of cryptocurrencies. Bloomberg points out that Yale's $30 billion endowment, managed by David Swenson, is one of the few institutional investors to move into cryptocurrency this year, as the entire market finds itself in a bear cycle that has seen value plummet from the last year all-time high. Despite the opportunity in overnight fortunes that have characterized much of the several years for cryptocurrency, institutional investors on a whole have been reluctant to put capital into the market to the degree that most investors are anticipating. So on this part, I half agree. I think we're starting to see more institutional money come in, but we're not there yet. The common refrain of institutional money is coming will not only signal legitimate interest in both the market and technology of cryptocurrency, but provide a much needed boost to alleviating the ongoing price bleed. Previous analysis, including the Bloomberg article on Yale, have cited a lack of regulation and potential for widespread market manipulation as a possible deterrent for investing in cryptocurrency. However, with an investor as large and prestigious as Yale committing $30 billion in endowment, crypto-based funds might garner more interest even in the absence of Bitcoin exchange-traded funds being approved by the SEC. So this article doesn't surprise me, and here's why. We have seen cryptocurrency drop over 70%. We have seen a massive drop. And institutional buyers do not like buying high. So when you look at people who are in large financial institutions, when you look at Yale, right, which is a prestigious college, but they have all sorts of investments all around the world. When you look at something like Yale, it doesn't surprise me because they see how much potential blockchain has. They see the amount of potential cryptocurrencies have. They see the amount of potential that distributed ledger technology has. They see that potential. And they see that prices have basically fallen a staggering amount. So they're going to come in and say, oh, well, this looks quite interesting. This has a lot of potential. Let me take a shot at this. So this doesn't surprise me at all. And I think this is just the beginning of large financial institutions beginning to invest in cryptocurrency. So that's my thoughts on that. Next up, Bitcoin volatility hits 17-month low. What's next? Bitcoin's volatility rates have hit a 17-month low due to a combination of slow news cycles and low trading volume, leading some investors to believe that the lack of volatility could signal a maturing market. Despite this, debate remains as to whether or not a stable Bitcoin is a positive sign for its future. For the past month, Bitcoin's prices have shown an unprecedented level of stability, ranging between 6,200 and 6,800 since early September. For the past week, this trading range has tightened with a new range between 6,500 and 6,600. This tight range has led many cryptocurrencies investors to jokingly note that Bitcoin may as well be a stable coin. Although the lack of volatility is leading many investors and day traders to believe that Bitcoin is gearing up for a huge price swing, some analysts think that this could signal a maturing market. While speaking to Bloomberg, Nigel Green, founder of the Davari Group, noted that the price stability could signal that the market is maturing. Bitcoin is approaching its 10th anniversary this January, but it has only been in the past few years that cryptocurrency has seen some mainstream adoption, and signs of institutional and corporate adoption has only been seen over the past several months. Mike McGlone, a Bloomberg intelligence commodity strategist, explained that because the market is rapidly maturing, it's likely that price volatility will continue to decline with the introduction of more Bitcoin-related products. He said, quote, "This is a maturing market, so volatility could continue to decline. When you have a new market, it would be highly volatile until it establishes itself. There are more participants, more derivatives, more ways of trading, hedging, and arbitration." It appears as though there exists a growing consensus that the Bitcoin markets are maturing, with David Tawil, the president of Prochain Capital, sharing a similar sentiment to McGlone, explaining that as more long-term buyers enter the market, there will be less buying and selling momentum. He notes that the current buying community are, quote, "folks that are invested on a long-term basis for a long period of time," which is leading to a declining group of short-term investors looking to make a quick gain by buying and quickly selling Bitcoin. As Bitcoin's volatility decreases as a result of a maturing market, it will in many ways be a self-fulfilling prophecy for lower volatility. Quote, "Volatility and volumes are two sides of the same coin. When speculators are involved, they drive unusually high volume as well as volatility by trading the asset with high frequency. As speculator involvement is diminished, volume goes down and volatility goes down as well." So guys, what do I think about this? This is one of those really interesting pieces that you could talk about for hours because it's such an interesting thing to me, and I've studied this type of piece for a long time, and that is with Bitcoin volatility and any type of markets volatility. So there are people in the cryptocurrency world who think that Bitcoin volatility is a good thing and that it will get more people excited in the price and more people come in. However, I kind of think volatility isn't necessarily a bad thing, but I don't think it should be you shouldn't want volatility is what I'm trying to say. And there are people who do want it. I've heard several pieces, I've read several pieces over the years of people who are like, yes, we want volatility. But when you think about it like this, when Bitcoin is less volatile, you're going to have, in crypto, this goes for all cryptocurrencies, not just Bitcoin, when they are less volatile, you're going to start seeing more businesses incorporate them into their business plan, which is going to increase demand, of course, because then people could be like, oh, I could use this for this, and you could buy things using that cryptocurrency. So I think volatility declining, prices becoming more stable, what this will lead to is a more slow and steady increase in price rather than the static that we have seen in the cryptocurrency market over the past few years, because this is a very new market, only 10 years old really. So I do think that this is a good thing that volatility is declining. Now, this could mean a big move in the upside or the downside. We don't know yet. I'll have to do some technical analysis. If you want to see that video, comment down below. But yeah, guys, I want to hear your thoughts on this. Do you think Bitcoin volatility and cryptocurrency volatility as a whole declining is a good thing? Let me know in the comment section down below. Now, onto the market. Market's down today quite a bit. We were last time at a $219 billion market cap level, so we went down about 3 billion, so not a huge drop, but definitely wouldn't say it's insignificant. Overall, the past few weeks, I feel like markets have mostly been stagnant. However, with XRP surging as of late, we have seen a little bit of a boost in the overall market cap level. So Bitcoin is down a little bit, Ethereum down a little bit, XRP down almost 4%. Today's biggest gainers on the day, with Noah Coin at 16% and Bitcoin Private at 16% and Electronium at almost 10%. Biggest losers, Eternal Coin and Dentacoin. And if we go back to the market cap, as you can see, majority of coins today just down a little bit, not too bad if you're in the top 10 coins or top 15 coins, mostly small losses and a couple very small gains. Also, guys, if you did not catch my review of Jur ICO, I will link it in the comment section. Do me a favor, click on it and watch that video. I think it's a really good review I did of that project. I really want you guys to check it out. So I'll link it in the description and in the comment section. Click on it. It's a review of a new investment project that I've been looking a lot at. So definitely check that out when you're done watching this video. If you enjoyed it, leave a like, subscribe, share it, and I will catch you in the next one. Have a great day.